What's up, guys? How y'all doing? Back with your guy Rafi, man. We finna get back into another episode of this good book that we done created for the people. You know what I'm saying? The richest man in America. You know, wealth building in America. A guide to a rich life. So we gonna get right into it, folks. You know what I'm saying? Thank you guys for tuning in. And we appreciate all you guys. We love each and every one of you out there. And we just want to say salute to all the people, and make sure you do good with all the money you earn. Make sure you do good with the people that come into your lives. And most of all, you know, this is to, you know, people believers who want to believe, you know, deep down in their heart. You know, you don't have to bring it public or anything, but just try to keep the faith, or bring in the faith, accept. You see what I'm saying? So we're going to jump right into this. So we left off. Build a credit score of 620 and above 700 if can. You know what I'm saying? It's so your credit score is your lifeline in the financial world. So always remember that. You know what I'm saying? So, sorry about that. So this is an aspect of your financial career that you want to pay close attention to and put a lot of effort into learning and maximizing your credit score. Your credit score allows you to benefit. It will allow you to use other people's money, such as banks, private lenders, business lenders, real estate lenders, borrowing cash for business startups, as well as low interest rates on auto loans, personal loans, and credit cards, and things of that nature. There's a better chance of getting approved for credit, paying less, or not having to pay a deposit on things such as personal utility bills, cable bills, etc. You will feel self-gratitude from being responsible as an adult and taking care of business. It can be a challenge to become debt-free. So if you're debt-free, stay debt-free. That's the way to be. Please do not get caught up in deep debt with high interest rates. It's a bad deal if you don't know how to manage your way right out of it. You see what I'm saying? It says you can start with a secured credit card and go from there. Discover Credit Card Services has a qualified secured card program. Make sure all your credit cards and bills are always paid on time. It's best to pay your bills as soon as you get paid, no matter if they're not due at the time of receiving your funds. This method allows you to stay on track and continue to save more money. Having good credit allows one to pass along good traits to your children and family to be responsible and have good credit scores as well. As you become familiar with how credit works, I'm messing up our little bow tie thing. Okay, so back to it. It says, as you become familiar with how credit works, you will be able to step into different levels of credit and different levels of lenders as well. Whenever a person has poor credit, it makes them suffer financial hardships. You will pay higher fees to lenders, higher deposits, higher interest rates when you purchase a car or home, as well as have higher insurance premiums. High interest rates and fees is something a person doesn't need when trying to become financially wealthy. Improve personality and character. Invest in yourself. It's all about continuing to work on yourselves to better your skills. Becoming financially wealthy takes skills. We must always on a daily be developing our skills. Learning your personal strengths and weaknesses is part of a business management trait. First and foremost, it's about being a good manager. We all want to have a B+ rating and above for our manager score. We must manage our lives with balance so that our lifestyles are productive. Learning to save money is the most important part. So having a good deal of discipline in your character is a trait that we must have to become wealthy. Actively learning and building new skills and traits makes it easier for your ideas and thoughts to become reality. Knowing how to articulate and process your thoughts and write them out as a plan or business plan is very powerful and is a must for success. Many of us know what we like and what to do in life, but lack how to express ourselves and articulate our thoughts and ideas. So We're going to teach you 6 core values of building wealth. You know what I mean? Building good relationships, complete goals and achieve good results, engage in communication, innovate means to make changes in something established, especially by introducing new methods, ideas, or products if you're a product salesman or anything like that. Optimism is an attitude reflecting a belief or hope that the outcome of some specific endeavor or outcomes in general will be positive, favorable, and desire for our plan to succeed. Provide good customer service. A great leader is a good servant. So remember that. You got to be a good servant to be a good leader. You know, many people want to be served, but they're not good, leaders. Or many want to be leaders, but they're not good servants. So, think about that. It says there is a purpose in our lives for investing. When you purchase your first shares, you instantly become a legitimate corporate business owner in the form of shares, common stock. You own a piece of the company. Your worth is the amount of shares you own and the value of the shares. You want to have ownership in the best and most profitable companies that do business in the public world. Your goal is to add 1 share at a time or more if you have the funds to invest. And always remember, be strategic in buying because your entry point could lead to a lot of great things, or your entry point could lead to sometimes being down in positions as they go down and up. But don't get discouraged by that. So, you want to have ownership in the best and most profitable companies that do business in the public world. Your goal is to add 1 share at a time or more if you have the funds to invest. Think big on your journey for wealth. Over time, if you are invested in profitable growing companies, your shares will increase in value, meaning the price goes up. The phone producer Apple ticker symbol. The phone producer Apple, as many we know as Apple, ticker symbol AAPL, was trading for $27.48 on December 2nd, 2016. And in August of 2020, it was trading for around $500. That's an incredible stock price increase over a period of about 4 years. On August 28, 2020, Apple declared a stock split of 4-for-1 basis, meaning for every 1 share you would receive 3 additional shares of Apple common stock in a form of a stock dividend. Before the stock split in August 2020, Apple was trading for $500, roughly around there. After the stock split, the price was $125. So $125 times 4 equals 500. You with me? So, and people that they know about them stock splits. So let's just keep moving. You see how a stock split works. The price changed due to the split. Before the split, you have 1 share valued at $500. After the split, you have 4 shares valued at $125. Your value is still $500, and now you have 4 shares instead of 1. And if the stock price goes back to $500, your 4 shares would be worth $2,500. Let us look at an example. Say you had 100 shares of Apple common stock on December 2nd, 2016, and you paid $27.48 per share. Your total cost for 100 shares would be $2,748. You are a business share owner, and you have 100 shares of Apple, and you are holding them for the long term, for the next 5 or 10 years. Here comes the month of August of 2020. Now the price of Apple shares have skyrocketed all the way to $500 per share. And now your investment of just $2,748 has grown to a whopping $50,000 over the span of 4 to 5 years. So now that the price of Apple, ticker symbol AAPL, is way up and is too high for the average retail investors to buy in, this pushes Apple to declare a stock split. On August 28, 2020, the 4-for-1 stock split took place. On that day, shareholders received an additional 300 shares for your 100. After the stock split, the shares are now traded for $125 and your account value remains at $50,000. On October 3rd, 2021, the price of Apple common stock is trading around $142.58. The share price continues to move upward. Stock appreciation. Let us do some math on the 400 shares at this moment. So $148.50 times 400 equals $57,032. An additional $7,032 added to the account. A nice profit for 1 year's time, and you did not have to break a sweat. Your portfolio will continue to grow over time if you stay 10 toes down and do not sell too soon. Looking back, you only invested $2,000.748. And over 4 years, your investment of Apple shares turned into $57,032. With our Apple example, real figures, I want you to recognize that it took discipline and determination to hold on to the 100 shares for 4 long years. This is actually a true example. Many people became thousandaires, millionaires, and some billionaires simply from buying and holding Apple shares. It takes strong will to stay focused and disciplined to not sell before the big payday comes along. Even if you hit a dry spell where you're flat broke, you do not sell your shares. You find other ways to provide for your needs. Learning to have multiple streams of income will help you fulfill your goals. Touching your long-term investment shouldn't be even on your mind. That's your way of growing wealth. Patience and perseverance is what it takes to score a big payday in the stock market. You know what I'm saying? So, Apple is a good company. People surely like their Apple products and services. Many investors would say that stock price will continue to rise in value. The stock price rises as a company continues to make a profit. The share price will go up and down based on the growth and future growth, as well as world news and events. A current interest rate around the world involving world trade, economics, and conditions of the stock market overall, such as the S&P 500, Dow Jones, and the NASDAQ index. Understanding and managing your risk is a big thing, you know what I'm saying? So let's study risk. It's any situation that leaves you vulnerable to danger is risk. In the financial world, risk is any situation that leaves your cash and investments vulnerable of being lost. We never want to take a loss. Sometimes we must cut our losses short. Managing risk should be done at its best. People may be depending on you to win, People may be dependent on you to win and make them a positive return on their cash. You know what I'm saying? Having sound judgment when to execute or when to hold and wait patiently is crucial to managing risk. Focus on character, tuning yourself up to make sound decisions and follow your first mind. In the financial world, most of the time, good results equals a nice payday. Money in the bank, as my landlord would say. Money in the bank, man. You know what I'm saying? Yeah. We must always keep a lookout for risk and protect our assets by being disciplined and making professional decisions. For example, if you're working towards building a profitable stock portfolio and choose to only buy profitable blue chip stocks, you wouldn't risk money and gamble with high risky plays such as penny stocks. If you desire to trade penny stocks, we recommend you open a separate brokerage account and save money so that you can have fun and gamble with penny stocks and other high risk stocks. You know what I'm saying? And Charles Schwab would be a good platform. As of right now, you don't have to pay a fee to trade penny stocks. That's what what I have experienced. It says, although there are good penny stocks that make people a lot of money, but deciding to risk funds that could be allocated to safer and less riskier stocks wouldn't be a good decision on behalf of a good money manager. Good companies grow year after year, and some pay dividends for 60 plus years. The best man never cheats himself and takes on unnecessary risk. Risk decreases your chances of achieving the desired result and increases the chances of losing money and assets. When we talk about wealth building, you know what I'm saying? Why not start at 1%? This is what my good friend said. She said, why not start at 1%? Start small, nurture the habit, and scale up over time. Invest for the future today. You see what I'm saying? Most people think that money won't make itself. Or will it? Compound interest is a process of growth that allows your invested money to grow exponentially over time. Compound interest occurs when you earn interest on interest. Each year your money is invested, you'll earn a percentage of interest on the total amount of money in the account, including the amount you made last year. The longer you allow your account to grow, the more money you will make in return. In 1994, Bill Gates was worth $9.3 billion. Fast forward to 2014, and the man was worth $81.6 billion. This ninefold increase in wealth wasn't fueled by Microsoft sales alone. Bill Gates' investment manager, Michael Larson, powered it. So that means, good people, good helpers on your side, working with each other. You see what I'm saying? Investing money is a fundamental strategy amongst wealthy people, and you don't have to do it alone. Learn how to invest or look for help. There are plenty of accomplished and trustworthy advisors out there. The bottom line, letting all of your savings sit idle in a bank account is a big mistake. So, yeah, you know what I'm saying? So we'll leave that topic right there, and then we'll get into another topic. So you have been joining along with the book, Wealth Building in America, A Guide to a Rich Life, the richest man in America. You see what I'm saying? We was inspired by the richest man in Babylon and great teachings from ancient times from people all over the world. You know what I'm saying? So make sure, if you would like, subscribe to the channel. It'll help us out some. If you would like, click the like button, share the videos. And make sure you stay tuned. And we love you guys. Make sure you keep your heads high, stay focused, have a positive mind frame, and make sure you keep your focus on building good credit. It will help you over the long time, and we'll see you on the next one. Thank you.